Hello there everyone, it's good to be back. Welcome to another day, another edition of 30 minutes of business content from right across Africa. We've got plenty of content lined up for you, a bit of it with a trade protectionist bent. We'll explain why in just a moment. Here's what's coming up. East African manufacturers are alarmed about Egypt's access to a free trade area being extended to EAC and Egypt. Delta Brewery sales in Zimbabwe fall as the thirst for lagers declines. And a Ugandan student is developing a drone which he believes could make farming in the country much more efficient. Let's start with some positive developments on the stalemate between the East African community and the European Union over the signing of an economic partnership agreement. Kenya's Ministry of Foreign Affairs in the last couple of hours is now confirming that talks have been finalized in Brussels. The three outstanding areas, export taxes, export subsidies and the relationship between the Cotonou Agreement and the EPAs, it says, have all been agreed upon in Kenya's favor. Now, the failure to sign the agreement would have essentially led to the imposition of significant EU import duties on Kenya's exports on top of what already apply now, while competitors such as Colombia, Tanzania, Uganda, Rwanda, Burundi and Ethiopia would all continue to enjoy their duty-free status. Now, the successful conclusion of these talks will now enable Kenya to continue enjoying duty-free, quota-free access to the EU. Kenya's negotiation team was led by Karanja Kibicho. He's the Principal Secretary of the Ministry of Foreign Affairs and International Trade. Now then, global demand for oil next year might grow a lot slower than previously forecast as economic growth and oil demand both remain fairly weak. According to the International Energy Agency, oil prices may extend their sharp fall so long as OPEC does not counter a supply surge that we've seen over the last couple of months. The IEA cut its 2015 estimate for oil demand by 300,000 barrels a day from its prior forecast. Its economists now forecast that future demand will be supported by prices near four-year lows of about $88 a barrel from well over $115 that we saw in June this year. That said, the agency is also warning that these low prices will remain under pressure because of resilient supply levels so far. Now, let's head over to London to get some more details on these developments. Miriam Bimard has been keeping track of the crude markets for us. Miriam, is this decline driven purely by technical factors, or are there other elements pushing oil prices lower and lower?
Well, Rama, there's mixed views as to why we've been seeing these drastic falls in oil prices. Despite the geopolitical instability in the Middle East and ongoing uncertainty with the Russia and Ukraine crisis, some analysts have told me that oil could drop to $60 a barrel, $60 US that is. Others predict that it will settle around $80 per barrel. In fact, the common consensus is that the shale oil boom in the US means that the world's largest economy is now more self-sufficient, and this will likely hit drillers hard, causing unprofitable wells to shut down, and this is where the problem begins. OPEC producers, who account for about 1/3 of global supply, have also lost market share to domestic production in the U.S., prompting fears of a price war.
Indeed,
at the same time, the IEA is forecasting 2015 oil demand to actually slow down as well, more than 300,000 barrels per day, Rama.
It's a huge drop all the same, but to what extent are the benefits of these weaker oil prices, at least from a consumer perspective, offset by a stronger dollar, especially for net oil importers like South Africa and Kenya?
Certainly, the stronger dollar makes it more expensive, but it also raises the issue of importers like South Africa and Kenya to actually look at new alternative prospects, not only for the sake of having new options, but also for consumers. Many experts have highlighted the existing potential for enormous renewable energy growth in the region, and now more than ever, experts say that South African crude oil, for example, has been accumulating, and that is weighing on on the supply side as well. At the same time, though, analysts have told me that for now, the drop in oil prices hasn't had a measurable impact on oil production, but long-term exploration investment planning could be dampened if the price decline is steep and long-term. Oil giants like ExxonMobil, Royal Dutch Shell, and Chevron make their investment plans years in advance, but smaller independent companies can be more sensitive to price swings as well, so we could see a shift there as well in terms of investment.
Which certainly will be a concern, especially for emerging East African oil producers. Final question to you, Mariam. Given how dependent it is on oil revenues to finance government expenditure, how big a devaluation in the Naira are investors expecting on your end off the back of the decline we've seen since June?
Well, many experts on this end are concerned that if we continue to see crude prices fall, that will have a major impact on Nigeria's economy and GDP, and of course the Naira as well, especially given that it's more than 90% dependent on oil for its foreign exchange earnings. The government has made it clear that it has to reconsider its fiscal operations because of any more declines in prices will very much hit the Naira exchange rate very hard. In fact, experts say that supply and demand very much determine the exchange rate, and that's why a downward trend in oil prices would naturally result in exchange rate depreciation. So investors are pricing in that the Naira will remain under pressure. We saw this weeks ago when the Naira slipped. If you recall, back in September, investors are not convinced the central bank can actually support the local currency if global oil prices keep plummeting.
Indeed, we'll have to leave it there for the time being. That's Mariam Behmad live in London. Let's move on to East Africa. Companies in this region are fearful that cheaper products manufactured in Egypt may swamp the region, kill off jobs, especially after the EAC moved to extend its free trade area under the tripartite free trade area agreement over to Egypt. Now, they argue that any such liberalized market access without qualification based on rules of origin will make goods manufactured in East Africa less competitive, since energy costs in Egypt are, even after July's cuts in subsidies, much lower. But are those sentiments that Egyptians share? Yasser Kim went to find out.
The news of the EAC extending the free trade area to include Cairo was met with satisfaction from the Egyptian side. Egypt was Africa's largest trader and investor in the 1950s and 60s, but this has dropped significantly in the last 50 years.
The continent took a back seat in Egypt in favor of Europe and the US. We have a good infrastructure for production and low energy cost, though energy subsidies are being reduced annually. But for now, we are competitive in Africa and should export more.
Egypt's trade with Africa is a modest $2.1 billion in 2013. That's 2% of Egypt's total trade. The leadership is trying to build new ties with the African side. Already a member of COMESA, Egypt hopes the EAC free trade area would pave the way for more trade and investments.
We need to concentrate on quality. A lot of our products need quality control. We're improving, but need to work harder if you want to get higher exports.
Egypt exported $1.4 billion of goods to Africa in 2013, mainly electronics, sugar and chemicals. It imports around $700 million of meat, oil, tea and coffee from EAC, while it needs wheat and agricultural products from its neighbors.
The potential is huge for a boom in trade. EAC has a population of 150 million in 5 countries, while Egypt boasts 90 million people. If tariff issues and transportation links are resolved, then trade and the economies of both sides will flourish. Yasser Hakim for CCTV, Cairo.
Right then, so what exactly is at stake in this latest trade row in the making, if you will, between Egypt on one hand and the EAC on the other? Let's find out. David Owero is a program officer at Kenya's Institute of Economic Affairs, where he tackles regulation and competition policy. He's with me in studio right now. Thank you for your time this evening.
Thanks.
For those of us who are not familiar with the nitty-gritty details of trade talks, what exactly are rules of origin? Why do they matter? Why are they such a big sticking point here?
Well, the first thing that we have to understand, any preferential trade agreement is basically to guarantee preferential treatment of another partner country's goods and services as compared to the rest of the world. And so usually to do that, you have to determine whether those goods actually originate from that country. And so rules of origin actually are the rules that are written to determine to what extent do you qualify a good as being originally produced or value added in a country. So in our case, the issue at hand is that the ESC negotiations with Egypt, manufacturers are arguing that we need to, apart from agreeing on the overall framework of the agreement, we also need to put in place rules of origin that will ensure that actually the goods that are coming into the ESC are actually of Egyptian origin.
But as I understand it, I mean, under COMESA, we already have those specific rules. So why are we negotiating that again?
Well, the importance of that is that now we want to concede even further tariffs with regard to Egyptian products. Because as you know, the ESC community has a common external tariff. So being members of COMESA, there are some partners within ESC perhaps who belong to multiple trade unions or preferential trade agreements. Yeah. And so in our case, we want to enhance that relation between ESC specifically with Egypt, which also happens to be a COMESA member. So the benefits that ESC members have will also be accorded to Egypt, though it's not an ESC member.
All right, let's look at the numbers in a bit more detail here. Egypt's exports to COMESA, at least this is based on data from 2012, was less than 10% of its total export. And yet, if you look at COMESA trade within itself, Egypt was the biggest single exporter within that particular trade bloc. Now, it seems like Egypt is holding all the cards here. Isn't that a disincentive for you to actually say, okay, fine, we'll negotiate, we'll concede a few things?
Yeah. Well, one might argue that, but actually, apart from Egypt's position being an advantageous one, it actually stands to gain the most. Because if you look at some studies which have been done more recently to show what kind of welfare impacts that a preferential trade agreement would have across Africa if the three trade areas would come together.
So that's COMESA, SADC,
and ESC. Yeah. If they were to come together, actually the biggest beneficiary would be Egypt. And so perhaps they know that and they have that in mind, and that's why they're pushing for this to happen. But that notwithstanding, it is very clear that other countries also stand to gain. Kenya, Tanzania, and Uganda, to mention a few. And so it's not all in Egypt's favor, but I think everyone stands to gain.
All right, one final question. Sugar. That just keeps cropping up in all these trade talks. The ESC countries always say, no, we need to protect our industries. But they have been uncompetitive for decades. Why do we keep doing this?
I think the argument that governments have advanced has been that we need to protect it because the sector or the industry isn't competitive globally. And still, most of our nations, if you look at the sugar industry within given nations, actually have an over-reliance in the sector in terms of farmers and the people who rely in the sector. And so it's viewed as a sort of a special egg which we need to protect.
It's a political hot potato.
Yes, actually that's the word. And so if you look at even the ESC, within the ESC agreement itself, sugar is listed on the sensitive product list. And so I think they just want to carry that over into the negotiations with the Egyptians to carry this through.
Well, it certainly would be a shame if they did, considering the fact that in all these countries, on a cost basis, we're entirely uncompetitive still.
Certainly.
Thank you for your time this evening.
Thank you so much.
David Owero, he's a program officer at the Kenyan Institute of Economic Affairs there. We've been talking about the latest efforts by the EAC on one hand and Egypt, of course, to extend a free trade agreement to apply to both parties. Let's move on to Mozambique now. Its ruling Frelimo party and its presidential candidate are likely to win elections this week, despite voters' concerns about corruption, income inequality and unemployment. Mozambique has enjoyed quite the influx of FDI following the discovery of vast natural gas reserves and fairly strong GDP growth at over 7% per year. Analysts, however, hope that these elections will provide a unique opportunity for a new president to get this country working.
52-year-old Frederic Sabella has been a taxi driver in Mozambique's capital Maputo for 15 years. On a good day, he makes about $100 US, but he says the cost of fuel and frequent maintenance of his car due to bad roads means what he takes home is not enough to feed his family.
Now the petrol is very expensive. Yeah, it's very expensive, but the business is normal for mine. About next president, maybe. If he win Mr. News, I think the life he will be right. Why? Because we promised the people something will change.
Like Sabella, most Mozambicans expect the ruling Frelimo party and its presidential candidate Filipe Nyusi to win elections this week. The advantages of incumbency and his party's historic dominance have allowed Nyusi to run a better resource campaign than his main challenger, opposition leader Afonso Dhlakama. This is despite voters' dissatisfaction with inequality in one of Africa's fastest growing economies, which has large energy reserves. Outgoing President Armando Guebuza has come under heavy criticism over corruption and the widening gap between the rich and the poor.
Maybe one day will be nice, but now the situation is very complicated about corruption. Yeah. But I will believe one day the situation will change. We need that.
Voters insist that Mozambique's plentiful resources, which besides offshore gas and oil, include huge coal deposits as well as farming and fisheries potential, could be used to generate more jobs and higher living standards.
We come into from a situation in Mozambique that we came from extreme poverty. We get to a point where there came hope and attractiveness of foreign direct investment in Mozambique. Now we're in a position that we understand what do we have. We have population, 23 million people, that we can build up on that. We have mineral resources. We have a country that we can develop agriculture to generate food and reduce imports. So now the future is in our hands regarding a strategy. Where do we want to get in the future?
Former liberation movement Frelimo has dominated voting in the country since its 1975 independence, and analysts already predict that it could win also this time round. Jane Keo, CCTV.
Quick run through the equity markets here for you. Aside from South Africa, they have red ink right across the board pretty much elsewhere. 200 basis point drop over in Egypt. In JSE, however, second straight day of gains. The top 40 index up about 7/10 or so. Iron ore futures in China apparently went up, and that essentially provided the momentum to drag up the iron ore miners and the rest of the index right alongside with them. Guys like Impala Platinum, Lonmin and so on are actually among the gainers today. So that partly explains the rise that you're seeing on your screens right now. We'll be looking at Delta Brewery sales in Zimbabwe next. Their lager sales have gone down, but what are Zimbabweans switching to? And the utter nightmare of navigating Cairo's traffic will also be in focus, as well as its cost to the economy. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening.
The rebasing of Nigeria's GDP has been a long time in coming.
The information provides us much more scope to know what the structure of the economy is.
Welcome back to the program. 20 minutes into the hour, you're watching Global Business Africa. Let's take you to Zimbabwe now. Zimbabweans, of course, are still struggling through their latest economic crisis, but they're not grabbing a cold one to drown their sorrows, as it were. The country's biggest beverage maker, Delta Corporation, reported a 29% decline in lager sales for the first half of its fiscal year, which ended in September. Apparently, Zimbabweans are now trading in their lagers for traditional brew. As Farai Mokutuya now reports, sorghum beer sales have soared even as Delta cuts lager prices.
Zimbabwe's biggest listed company had previously seemed immune to the economic ills. But now, hard times are pushing drinkers to sober up, and Delta is feeling the pinch. Beer outlets I went to confirmed that the fall in demand has been most pronounced in lager beer sales.
People are no longer drinking as much as they used to. They all say they don't have the money.
Last month, Delta slashed prices on some of its brands to stimulate consumption, a strategy that other fast-moving consumer good producers have adopted to help endure a liquidity shortage that has pushed the economy into deflation.
But how sustainable in the long term is this price reduction strategy?
It can be sustained up to a certain level. Because we also have to take into account the high cost of doing business in Zimbabwe. There are other macro factors, other exogenous factors that impinge on business profitability that they can't control.
These include high cost of capital, labor, and utilities, which have all conspired to whittle down productivity and fuel company closures, leaving the manufacturing sector operating at just 36% capacity.
The productivity in manufacturing sector has actually gone down slightly. So it doesn't really augur well for the prospects of the economy going forward.
But it's not all doom and gloom, particularly in the case of Delta.
Now, while the thirst for lager beers has diminished, the market here has acquired a new taste for more affordable sorghum brands whose volumes actually went up 14% in the first half of the year, helping shore up the company's performance. And I must say, it doesn't taste too bad either. Farai Mokutuya, CCTV, Harare, Zimbabwe.
Elsewhere, gold output at South Africa's third largest gold mining company, Harmony Gold, went up by 6% in the first quarter of its 2015 fiscal year. Chief Executive Graham Briggs says the firm is strengthening its margins by increasing production amidst a market in which gold prices have fallen significantly since the start of the year. Harmony Gold is involved in the exploration, extraction, processing and smelting of gold in South Africa and Papua New Guinea. It also handles uranium, copper, silver and molybdenum, and it has 11 underground operations and various surface ones too. Graham Briggs and his team will release detailed results for the quarter ending September 30th on the 5th of November. Now, in our special series on traffic across Africa, we'll take a look at one of the most congested cities in the world, Cairo. On average, cars there move at anywhere between 15 and 35 kilometers an hour, and that's mainly due to the gridlock that always plagues the city. As Yasser Kim reports on What's Hot Tonight, solving that problem will take billions of dollars and quite a bit of creativity.
It's afternoon in downtown Cairo. People are leaving work. It's totally locked. A 2-kilometer road like this one takes 3 minutes to cross. Now, 2 hours at least. Walking down the street is usually much quicker than reaching your destination by car. It is said here in Cairo that every hour is a rush hour. The UN estimates Egyptians spend over 350 hours per year in the streets. A rundown public transportation system, lack of parking areas and absence of police are just some of the reasons for this chaos. More importantly, however, is overpopulation. Cairo has 20 million inhabitants, way over its ideal capacity.
What can we do? It's always like this. I spend more time in the street than at home because of the traffic jam.
The current government is working on easing the congestion by renovating and widening main roads, constructing new highways and bridges. To relieve the burden off the roads, there are plans to renew an old state-owned bus service on the Nile, while allowing the private sector to establish a Nile taxi. Some say it's not enough.
If public transportation is renovated, then more people will use it and we find less cars in the streets.
The government says Egypt loses nearly $4 billion annually because of traffic congestion.
Where is the police? If they enforce the law, a lot of the problems will be solved, but they are not here.
A solution is not expected anytime soon. A complete overhaul will cost nearly $20 billion. Too much money for a government with a high budget deficit and mounting debts. Yasser Hakim for CCTV, Cairo.
Let's look at oil prices in a little more detail with regard to commodity prices, because that really is where the story is for. So I'm asking you a couple of questions here. The IEA's report had some interesting gems in it. If oil falls to about $80 a barrel, how many projects will be rendered unprofitable? The break-even point for about 2.6 million or so barrels of daily output is well over 80 according to the IEA. So that's an interesting point. One more question to ask with regard to African airlines. How many are going to be caught dead with hedges above $100 a barrel? A Ugandan student is developing a drone which he believes will make farming a lot more efficient. We'll be looking at that in a little more detail next. Welcome back. A Ugandan student is developing a drone which he believes could make farming in the country way more efficient. Now, in the public eye, drones, or to use a proper term, unmanned aerial vehicles, are largely associated with military strikes and surveillance operations. That, however, is just a fraction of what they really can do. Emmanuel Konyanga thinks his UAV could help Ugandan farmers gather data on large plantations without breaking the bank. CCTV's Leon Sanyanga has more on Grassroots tonight.
Emmanuel Konyanga is aiming for the skies. The 24-year-old engineering student is developing an agro drone.
I needed to first understand the physics behind the drone, the Archimedes principle, how you create pressure difference, and then the object lifts off and all those kind of things. And after understanding those things, I needed to know the electronics, what kind of components that I need, and then from there I was able to have an idea of what components I'm going to use to build the drone.
Kolyanga's gadget weighs under 2 kilograms. With a remote control, it can fly at a height of 100 meters for about 15 minutes. Still undergoing testing, Kolyanga hopes the device will one day be helpful to farmers in Uganda.
We mainly look at two things. First of all, being able to just eyes in the sky, and then also we look at performing an activity, and that is for now what we can achieve is spraying the crops, and then also just surveying.
Several farmers in Uganda still practice subsistence agriculture and use rudimentary tools. The drone has been programmed to fly low over farm fields and stream videos back to a ground station. A farmer can then use the images to analyze crop fields. The inventors believe that a tool like this can revolutionize the agricultural sector.
You're going to see that probably farmers are getting more accurate data. So you will have live feed on how your crops are doing, and in that way you can tell what exactly your crops need. Do they need more water? Do they need less water? How are they doing in terms of, is the soil really treating them well?
Once Emmanuel's drone is ready to market, it will have to be approved by Uganda's Aviation Authority. And then the sky is the limit. Leon Sanyanga, CCTV, Kampala, Uganda.
Away from that future competitor for DJI Phantom's drone, a quick run through currencies here for you. Let's see what's happening with the rand. It's still choppy against the American dollar, about 11.06 to the greenback by about 15 or so GMT. We'll leave it there for the time being. Thank you so much for watching. I'm Ramanyang. We'll see you tomorrow.